point of debate here at the summit, and that is whether we've peaked or the best is behind us as far as the banking sector performance is concerned. At least for now, we've had a stellar last few years, particularly the last year has been a record-breaking year on many fronts. Of course, banks find themselves very well capitalized at this point in time, so that balance sheet problem has largely been addressed over the last few years. How do you read the trends, the signs? Does the government have a view on whether there is likely to be a deterioration in asset quality? Is there a view within government on what the next few years could look like for Indian banking?
No, I don't think there is any concern at this point about deterioration in asset quality in Indian banking. The regulators, Central Reserve Bank of India, has been doing a very good job of keeping on top of it. As we saw a few months ago, or rather towards the end of 2023, the preemptive measure they took on increasing risk weights on unsecured lending, etc. I think, and also the deployment of technology and to flag rising concerns. So I don't think there is any concern here about the asset quality deterioration. Nonetheless, of course, you pointed to the fact that banking sector performance was very good up until the financial year FY24. Therefore, naturally, given that the base has gone up quite considerably since the difficult days of the mid-2010 to 2020 period, it is natural that the growth rate moderates. And that's a good thing, because we want the financial cycle to be stronger for longer. And in fact, if there is a moderation in the net interest margin of the banking system as a whole, it isn't a bad thing, because we have seen, for example, in the United States pre-2008, when the financial sector performance or its market capitalization in the overall market cap rises much faster, it actually is a sign of imbalance rather than a sign of health in the overall macroeconomy. So some moderation and at the same time continued healthy growth isn't a bad thing. As far as the medium term is concerned, I think we do need to look at, given the investment needs of this country, both for normal infrastructure investment and climate-related infrastructure investment, and also for replacement demand, what is the level of savings and how can that be generated through income and employment growth, and how will the savings be intermediated through through capital markets and through the banking system? What should be the right debt to equity mix, and given that, what should be the size of the banking system in the country? Do we have enough number of banks, and why is it that we don't have a global bank that caters to Indian industries, investment interests overseas? Because many countries, whenever their industry went into another country, their financial institutions also followed suit. But for example, the Indian industries' overseas banking needs are still met by multinational banking industry. So these are all the questions that we need to contemplate, apart from the fact that the induction of technology should actually be geared towards making banking easier for our consumers rather than more complicated. Because although the Indian demographic dividend is very strong, the aging population will catch up with us as we head into the mid-2030s onwards, and therefore making it more and more technology intensive will also make banking more and more difficult for our households. So we need to strike the right balance between technology, safety, security, and ease of use for the Indian public, and also with respect to employment generation, the application of artificial intelligence, etc., because banking industry is something that operates on trust. And people do associate trust with the human interaction. So those are all the questions that the industry need to contemplate for the medium term as far as Indian banking is concerned.
Since we're talking about contemplating questions for the medium term, sir, let me ask you about the journey that we've seen, and we've just clocked that 10-year milestone as far as the Dhan accounts are concerned. CA, what do you believe the next phase of evolution needs to be when we talk about Dhan accounts? Because while we've done a fabulous job in opening these mammoth no-frills bank accounts, but the fact of the matter is that we still have about almost 8.4% of the accounts, which is about 4 crore accounts, which are still zero balance. And anyway, these are meant to be zero balance accounts. But also inoperative banks, about 10.6 crore are inoperative accounts at this point in time. So as we move beyond this 10-year milestone that we've clocked, what do you see as the next phase as far as the Jan Dhan accounts are concerned?
Shereen, even if we are able to show that not the glass being half full, but 3/4 of the glass is half full, you are saying that the 1/4 of the glass is empty. I mean, that is a bit harsh and unfair.
That's not my intention at all. That's not my intention at all. I'm merely asking this in the context of the next 10 years. Now that we've opened these accounts, the next 10 years, what should the priority be?
Look, at the end of the day, I think these accounts are starting points, and then whether it leads to greater financial access for resources for growth, and ultimately the financial sector grows when there is employment generation, income growth, and savings rises. So therefore, the next set of growth for Indian public has to be to achieve the right kind of balance in their portfolio between financial and real assets, and also have a high sense of financial literacy. And more importantly, the concept of insurance is something I think that needs to grow along with the spread in banking. So these are all the next steps that we need to contemplate as the Indian public overall achieves a higher level of financial inclusion than we have seen in the previous decade. So I would expect that these are the next milestones or areas of attention from the policymakers, from the industry and regulators, etc.
Sir, speaking of the next milestones, something that is much more immediate, of course, is the base year revisions, both as far as GDP and CPI are concerned. When can we expect that? And do you have a view on what those should be?
I don't have a timeline at this point to share with you, but I'm aware that the Ministry of Statistics is very much actively engaged in the process of addressing not only the base years, but the constituents and the weights of various indices, and then leading to GDP base year, etc. And the 7th economic census, index of industrial production, also looking at launching producer price index series, revising the consumer price index. All those exercises are very much underway. Perhaps you should have a conversation with the Secretary, Ministry of Statistics.
We will try our luck with that as well. My final question, CA, before we let you go, let's talk about the global environment. We've, of course, just seen the Fed chief speak at the Jackson Hole Summit. We've had the MPC minutes come out as well. One, on the commentary that's come in from the Fed, what do you make of that as far as the global interest rate trajectory is concerned? And what did you make of the MPC minutes as well?
Shereen, I have never commented on the monetary policy stance in India in public, and I'm not going to mar that record now. As far as the Federal Reserve is concerned, I think it will be presumptuous on our part to tell them what they should be doing or what they ought to be doing. But I think it does look like the Federal Reserve, and even today as we speak, the personal consumption expenditure price index data have come in on the lower side. At the same time, we had the GDP data for the April to June quarter was revised higher. Of course, one can always say that that is a historical data. And looking ahead, I think there has been a certain softening of employment figures and softening of the inflation figures as well in the country. Maybe the financial markets, rather than commenting on what the Fed will be doing or what they ought to be doing, what I do feel, however, is that the financial markets may be discounting rather aggressive and faster pace of rate reduction on the part of the Federal Reserve than what they may actually do. This is just my guess at this point, wearing the hat of a capital market participant from a different era, from an earlier era.
Well, since we're talking about eras, sir, my final note to end this conversation on, we're talking about the future of banking and how we expect banking to transform the country and transform itself as well. What would be the pillars of transformation that you believe the banking sector needs to prioritize and really to be able to achieve that $10 trillion aspiration, which is the more immediate aspiration? Do you believe the Indian banking system is geared to deliver for that?
I think the Indian banking system as a whole, that includes the industry participants, the regulators, etc., need to tailor their approaches to the Indian context. We need to be aware that some of the principles and practices we import from overseas may not necessarily suit the context of a developing country where many small and medium enterprises still do lack access to finance. So whether it is in insisting on certain external credit ratings, some of these things were flagged by the Honorable Finance Minister in the budget speech as well, classification of accounts into special mention accounts, SMA 0, 1, 2, etc., and what they actually do during this period to nurse the accounts back to good health. And therefore, access to credit is extremely important aspect. And second, at the same time, the low-hanging fruits of credit are always about personal or consumer loans. But there again, I think the banking industry should be mindful of the fact that one should not kill the goose that lays the golden eggs, that is over-lending, or for that matter, over-borrowing on the part of the financial sector, or the part of the household sector, will eventually prove detrimental as the financial cycle will enter into a prolonged downturn, as we saw in several countries in East Asia and probably are seeing in China at the moment, for example, or for that matter in advanced countries post-2008. In other words, I think one important behavioral aspect that the industry has to keep in mind is moderation in terms of growth and in terms of credit culture will stand India in good stead, and also ensuring that whatever we do, we tailor it to the Indian context and the fact that we are a low-income aspirational country wanting to become a middle-income status. We need to sustain our growth rates, whether it is economic growth or credit growth. So whatever that needs to be done to sustain them, and that includes delayed gratification on the part of the banking industry and the non-banking industry, those would be my sort of ideas or priorities for the banking industry for the medium term. Back to you.
CEA, thank you so much. I know it's been a very, very busy day for you, but we truly appreciate you taking the time out to speak with us here today and address the gathering of bankers, NBFCs, fintechs, and policymakers here at the CNBC-TV18 Banking Transformation Summit. We truly appreciate your time, and thank you very much for leaving us with that thought of the Indian banking sector playing a Rahul Dravid-like innings. We truly appreciate your time. Thank you very much. Ladies and gentlemen, a big round of applause for the Chief Economic Advisor, Anantha Nageswaran.